Wonderful. Well, lovely to see so many of you here today. I'm delighted to be joined by a stellar lineup for this panel discussion. And over the next 40 minutes or so, we're going to take a deep dive into what is a responsible supply chain. Why is it important? I think, as we all know, it's not just for compliance. Actually, if we've got truly responsible supply chains, then perhaps we can unlock access to more capital. We'll be more resilient to geopolitical shocks, more resilient to weathering the impacts of climate change. And so over the next 40 minutes, we're going to take a bit of a deep dive into, well, as much as we can in 40 minutes, into what that looks like. And I'm delighted to be joined by all of you who've got such a range of experience. So if I can ask you all to introduce yourselves, that would be wonderful, please. And Brent, maybe if we can start with you.
Sure. Thank you very much. And thank you very much, everyone. It's great to be here. And my name is Brent Bergeron. I'm the Senior Vice President of Corporate Affairs and Sustainability for Pan American Silver. Pan American Silver is a company based out of Vancouver, Canada. And our primary production is in the silver area. We also do gold and other metals. We have operations in Canada, then Mexico, and all the way down to Patagonia.
Absolutely. So when we're thinking about geopolitical risk and influences, it would be great to get your opinions on that in a bit. Emily.
Hi, my name is Iona Stewart. I'm the head of policy for the Transition Minerals campaign for the NGO Global Witness. Global Witness has worked on mineral supply chains for the better part of 30 years. Some of you may know us from our work on the Kimberley process and diamonds back in the day. And so we have unfortunately often seen what goes wrong when things do go wrong. But we've worked quite a lot in recent years on making sure that things go right, particularly in what we're seeing quite a kind of boom area for making policy on minerals.
Yeah, and critical minerals are so much more in the news and on everybody's radar, even in the last 12 months than they were 5, 6, 10 years ago. Mm-hmm. So thank you for joining us today. Patrick.
Yes, my name is Patrick Drouin. I'm with Wheaton Precious Metals. I've been there for 12 years now. Wheaton Precious Metals pioneered the royalty and streaming industry. For those who aren't familiar with it, we're capital providers to the mining industry. We look to take streams or royalties. We've been doing this for 20 years. So we are on the capital providing side. I'm the Chief Sustainability Officer, which means I oversee both our strategy and also how the strategy is implemented. And a big part of that implementation is a due diligence process that we've developed. And that's something we'll be getting into more detail on here.
Thank you. And I think your views on that due diligence process and what you're actually looking in for projects that you want to support is going to be really valuable as well. And then last but not least, Ingo.
Yeah, good afternoon, and thanks for joining. Lifezone Metals is a nickel, copper, and cobalt development company with a flagship asset in Tanzania. We do the development in partnership with the Tanzanian government. Nickel is a critical metal. Most people that we talk to with regards to offtake, they want traceable and clean materials. So for us, ESG is multifaceted. It's on the one side working with the communities and close by stakeholders, but it's also thinking through the supply chain until the end customer, which could be anything in the stainless steel or in the battery sector. Yeah,
absolutely, and perhaps how you can verify what that supply chain looks like as well might be really of interest. So we had a pre-panel discussion a couple of weeks ago, and I think the main challenge today is going to be keeping this discussion to 40 minutes. So in one sentence, to kick us off, please, and Brent, I think we'll start with you again. What does responsible supply chain mean to you?
Ooh, in one sentence. Well, responsible supply chain basically means that we're taking a look at the entire realm of where we're operating and how we're operating, how we are working with different communities, and in essence, what standards we are using to make sure that the products that we produce are getting to the end user in a way that is ethical, responsible, and at a standard that needs to be done for these end users.
Wonderful. Thank you. I'll just about accept that as a sentence. Emily.
I'm going to cheat by starting off by saying how much I like the taxonomy of using responsible instead of sustainable, because that conversation has moved on a little bit. Obviously, sustainable is a good word, but it means a lot of things to a lot of different people, whereas responsibility, I think, is what Brent was saying. It's thinking about your stakeholders. It's thinking about all of your supply chain, your communities, your end users, and really doing the best that you can do. And I think that that's a moving target, and that's okay. Responsibility is about, if you look at the IRMA standard, for example, it's about moving from one place and constantly striving for better.
Absolutely. I am in total agreement with that as a concept. Patrick.
Yeah, so as a capital provider, I'd say we view responsible supply chain, not sustainable, we'll go with that, as really requiring multiple agents to work together for a common goal, and that is sustainable or responsible mining, and mining that adheres to a consistent set of standards and expectations.
I'd like to pick up on that in a moment, please. Ingo, I'd love to hear your...
From our perspective, we are at the coal phase, so we are at the development stage, so there's significant expectations within the community in our host country. So for us, it's on the one side, making a positive impact right from the first step we set a foot in the project area, and anticipating minimizing negative impacts like pollution, for instance. I think the standards are all there, how to measure that, but it's building the system, having a risk management system around it to minimize negative impacts.
Yeah, okay. That's a really useful insight, thank you. So Patrick, I'd like to kind of pick up on what you just mentioned. And you said that there are standards and frameworks that you use and when you're doing due diligence on potential projects. So it'd be great to understand from you, are there any kind of red flags that you see, but also which standards and frameworks are the most useful to you?
Sure, so when we look at due diligence, we look at the technical, financial due diligence, but we also layer in a very thorough ESG due diligence process. And that entire due diligence process that we do will inform things such as what valuation, what discount rate we use for valuing an opportunity, what terms we need to put into new contracts, and also will impact whether or not we want to do an opportunity. We really like to engage. That's what we're focused on. But there are times that through our ESG due diligence process, we can't do anything. It's just something we simply have to walk away because the opportunity, the counterparty may not meet our criteria related to risk, or we can't see a path forward to get over any kinds of issues we've identified. So to describe our due diligence process just on the ESG side, and the technical and the financial is a huge endeavor in itself, but we've got 15 different criteria that we look at on an ESG due diligence process, ranging from climate, water, air quality, biodiversity, to labor, to health and safety, communities, affected communities, governance. So it's very, very comprehensive. And again, when we look at all these things and we look at specific opportunities, really the minds vary by site, so much so that it's really identifying one key issue on a consistent basis. There's not one red flag. But we have walked away many, many times because there's been a lack of community support or lack of social license, or we see issues on the environmental side that are just too great to get over. What we've done in recent contracts, the past 4 contracts we've entered into, is require that the counterparties adhere to certain standards. Specifically, recently it's been the IFC standard and the global industry standard on mining, the GISTM, tailings management. But we'll also layer in, if we think there's other risk involved, we'd layer in things like the voluntary principles on security and human rights, if that's appropriate to the site we're looking at. So these are all things that we look to put into place. We do look at other things, recently the consolidated mining standards, certainly something that we'll look to potentially layer in because we think that there's a benefit there.
Yeah.
Of course, that only applies to operating assets, so it's not going to be apples to apples. We also, as part of the contracts, require a regular audit to ensure that the counterparties are adhering to the standards we have in place, and if they aren't, making sure that they've got a mitigation plan to address it. The other way we kind of protect ourselves when we do this is we'll tie upfront payment. With development assets, we usually have a staged upfront payment. So we'll tie certain payments to key milestones, and a lot of the time those milestones are on the ESG side. Things like getting a permit, key permits, or getting an agreement in place with communities or First Nations. So that's another way that we layer in protection and mitigate the risk as much as we can.
Yeah, so what I'm hearing is that although we've got very useful kind of international standards and frameworks and guidance out there, it's still very context specific as to what the project is and what we're doing. So perhaps, Brent, if we can come to you then next. You work in different countries with different risk profiles and challenges, I imagine. So is there a tension sometimes between what local standards are and perhaps what international requirements might be from funders and financiers, and how do you deal with that tension?
Yeah, I'd say that there's sometimes tension in between what we do as a company. Our company adheres to, being a member of the Mining Association of Canada, we use a standard called Towards Sustainable Mining, and that standard has actually been introduced in many countries around the world. So we took a decision as a company that, for fear that we sometimes get blamed, you do things really well in Canada, but you don't necessarily do it that well in other countries. We just decided, well, we're going to apply this standard equally at all of our operations. Now, what does that mean in terms of some of the tension that it can create sometimes? Is that certain countries, you can take certain countries that have signed on to certain conventions, and they did it because maybe that was the way that all countries were moving towards. This happened in Latin America with the ILO 169 convention. But the rules and the regulations in terms of how you work with it and how you implement it may not be very clear or established in some of these countries. And that can create a tension in terms of what standards do we actually need to apply in the countries. Now, communities and sometimes non-government organizations will require us, well, you should be actually implementing the standards that you're using in Canada, what you're doing with First Nations or communities of interest, and that's what you should be using. Then you'll sit down with some of the government officials, and I remember clearly in one country, a minister coming up to me and saying, don't you dare start looking at the issue of Indigenous land claims in our country because that doesn't exist in our Constitution. And where does that leave us as a company? Because we wanted to implement, we wanted to do it, but we have to wait for the country because we're stepping above in terms of some of the regulations in the country. Now, it's an opportunity, I find, for companies also, because it gives us an opportunity to work with government and actually talk to them about, well, you've signed on to these conventions, this is what you should be doing in terms of the work that you're doing with your own communities and how that will give clarity, not just to companies that are going to be operating in your country, but clarity to the communities that will be demanding this from us, and we clearly want to do this, right? So that tension does exist sometimes, and we have to overcome it. And unfortunately, it still does exist in certain countries.
Yeah, but quite refreshing to hear that that could also be an opportunity to build relationships with not only the communities around projects, but also the governments that we're working with as well. And so maybe, Emily, I imagine at Global Witness you don't always see the best side of the mining industry. And it'd be lovely to understand from you, is there actually a tangible benefit to having a responsible supply chain? Does it make a difference? Does it minimize disruption in the long run? Have you got any examples of perhaps some of the key interventions, the actions that mining companies have done that have actually worked?
Yeah, you've set me up really nicely there for that, to say that yes, absolutely, there is really good tangible evidence that good practice is good business practice. And I was saying to Patrick backstage before we came on that I love talking to finance. That's an easy conversation for me to have because the kinds of recommendations that NGOs make are exactly the sorts of recommendations that finance is often making as well to de-risk situations so that they can come in and finance projects. So the business case is sewn up, but you are right to say that yes, unfortunately, we have seen issues. We released a report last year which tracked 4 key commodities for the energy transition: nickel, copper, lithium, and cobalt, across the top 10 producing countries. And we found that in those top 10 producing countries, there was 334 incidents of conflict, of violence, of protest, of legal challenges. Just to give one very concrete example of that, the La Bambas copper mine in Peru has lost 600 days of operation in a decade because of conflict with the community that is ongoing. So, there is a very tangible business case for making sure that you do these things right, because even when you're operational, you can be having issues on the ground. And so what's key here is that I know that we have lots of conversations about speeding things up, and I get that there are issues with timelines, and quite often that's just down to personnel, about not having enough people to fill in the paperwork to do permitting. But it's very tempting to look at things like your environmental impact assessments and your community consultation and be like, oh, we could probably speed this bit up. But don't, is the advice, because although it might feel like it's taking a little while in the first instance, it really pays a dividend in the longer term. If you front load your environmental and your climate impact assessments, if you front load your conversations with the community, you are far less likely to come across these legal challenges, this kind of conflict and protest later on, and you're far more likely to have a positive operating environment where the community is feeling good about having that mine there, is hopefully participating and getting some benefits from it being there too.
Yeah, absolutely. So what I'm hearing is that it might seem like it takes slightly longer at the start, but if you get it right and build those foundations, and that can pay dividends down the line.
Exactly.
And also, I'll just add to that, which I think is a really important point, is that when you do all that work at the beginning, the objective, when I think of what we do as a company, is that it's not just to open a mine or get it into production. It's what will be your relationship over the entire timeline of the life of mine, and afterwards, because you do want to leave a legacy after in terms of things that you've done, even after you're not operating. So having that mindset in terms of that work is for the entire relationship as opposed to only one point in time is actually extremely important how you approach the communities with that.
Yeah, and perhaps then Ingo, as somebody who's developing projects and in the middle of all of this at the moment, from your perspective, what kind of due diligence approaches are you seeing from buyers and investors? And are there any particular standards and frameworks that are important to you, especially if we're thinking about climate change and circularity as well?
Yeah, so to put this question in perspective, the Kabanga project in Tanzania is a large-scale and high-grade nickel deposit. It's quite distant from the coast. It's in a very remote area, and that's also the main reason why it hasn't been developed. It's large scale in the sense that it will be around $1 billion in capital, which means it's not a single source of financing, it's not a single source of equity, and it's not a single source of debt. So multi-sourced financing, therefore, they need a solid ESG strategy that you can also independently verify. So there's on the one side the strategy that really focuses on the stakeholders in the country, which is, so to say, what is material to them. And then there is an increasing, and I think over the last 25 years, what you have seen is more tick box checklist-based, more evidence-based approaches. The standards itself, they actually haven't moved. There was an enormous proliferation in standards. So the Intergovernmental Panel on Minerals, Metals and Mining established that there's now 156 different standards that apply to mining companies, different stages, different parts of the supply chain, different commodities. So the challenge that a junior company has is to ultimately not go to the smallest common denominator. It's more the highest denominator among all these standards. The good thing is that ultimately projects of this size are being led by, call it World Bank, OECD standard organizations, especially of the lending side. And the guardrail still there is the IFC performance standards. And then you overlay it with UN or OECD guidelines on supply chains and human rights, for instance. And if you have tailings operation, which I guess most mines have, then you are, of course, in the international tailings standards. But it is... Just to put it in perspective, we are around a 400 million market cap company, and we have more than 20 people full-time in the ESG space. And that's not satisfying project financing. Mm-hmm. I mean, it's me and the small team here in London. I think the large majority, of course, is working with communities, data collection, working on the project and so on. But even in today's world where there's a little bit of a rolling back and a welcome efforts to consolidate standards led by the ICMM, you still need a lot of people, and it's the key to financing. There's no project financing, and there's no project financing, I think, in the next decades if you don't do your homework and you can't document it.
Yeah, and I think something else that you've touched on there is the challenge, especially for junior miners. How do you navigate through this alphabet soup of all the different standards and frameworks that are out there? So I think there are definitely some themes coming out of this.
And can I just jump in on the standards thing, because I completely agree with Ingo. The proliferation of standards is not helpful to anybody.
No.
You know, as a civil society, we often point to the IRMA standard as the gold standard because it's a standard that has been developed alongside civil society, alongside communities, and has existed and been operational for a while, and it does this thing of you know, having a progressive standard. But I definitely think, you know, enough standards now, and nobody needs to develop any more. Let's stick to the ones we have. The UN have been proposing to do that, by the way. Obviously, the news has just come out that they're about to do a big reorganisation, but they did say that they were going, UNEDA were going to do a consolidation effort to kind of benchmark the standards to help make that a bit clearer for everybody.
Okay.
Hopefully the consolidated mining standard that's the initiative ongoing will alleviate some of that. And I do a great standard, but it's very onerous on mining companies. It's to the point where, you know, most of our partners, it's almost untenable for them. So there needs to be something. I know that's a gold standard, but companies have to operate at some point, and that standard is just very difficult to achieve.
Again, personnel and auditing, always a difficult thing.
Well, it's not so much the auditing. The auditing's fine, but it's the publication of audits. Whenever you do an audit, there's going to be things that need to be tweaked on an annual basis or whatnot, but it's having to put that out there and be completely transparent in mining can be difficult.
Yep.
Yeah. So it's not easy. And if we perhaps now think about artisanal and small-scale mining, that might even be even more challenges associated with that. So Brent, something that you've spoken about very eloquently in the past is some of the challenges around artisanal and small-scale mining in Peru, and the idea of there being a central bank to buy responsibly produced artisanal gold. What sort of safeguards would we need to have in place to make that actually credible to some of the refiners? And is there a capacity, is there a willingness from large-scale miners to actually support that?
Yeah, and it's an interesting subject. Fortunately, during the first 10 years of my career in mining, I actually didn't have to deal with the issues of, because all of our assets didn't have any artisanal mining around them. And then when I came to Pan American 6 years ago, it seemed like almost, well, 50% at least of our sites had the issue of artisanal mining. And it's a subject that I hope, especially, you know, listening to some of the conferences this morning, the events this morning with government, that, you know, that is not something that's going to be left aside or sidelined in the interests of critical minerals. I really hope that that's not going to happen, because it's an issue that does need the collaboration of many stakeholders in order to solve. And I, again, you know, in conversations with government officials, you know, I've had ministers in different countries come up and tell me, you guys take care of it, and we'll support you. You know, just go. And that's not the way that we have to do it. The issue, we know that it does exist. You know, the estimates, for example, in Peru at the moment is that about $8 billion worth of artisanal gold makes its way outside the country on a yearly basis. So it's not a small market. Where does that gold go? How does it get out? Which groups are actually in charge of it? Is why we're trying to answer the question of, you know, where can there be a legitimate buyer for that gold? Now, from our perspective, our refiners are placing a lot more pressure on us in terms of making sure that we understand our entire supply chain, make sure that it's not contaminated. Now, some miners have started working with artisanal miners, and I mean, there's some models out there. You know, the pressure that we've received from our refiners is they see we do have an operation that does take ore, but we have to do a lot more auditing, a lot more work to make sure that we understand where it's coming from. And I think that that's a good idea, because that model that we have there is actually working in terms of what I call an official formalization process. But when I take a look at the risks that we encountered at one of our sites in Peru is that while we have a large concession, we have a smaller footprint of the mine, and then we have artisanal miners operating close to us. We can actually see them, but it's on our concession, which from a company perspective, we start looking at this and saying, well, what's the risk involved in this, right? There can be. So we decided to start a formalization process with one that sort of baptized itself as a cooperative, has 98 members, and they're formalizing themselves. They're raising their standards in terms of how they're mining, their recoveries, how they're processing, and it seems to be working well. Still on our concession, but it seems to be going well, and they're staying within the footprint that we've agreed upon. Now there are other miners, illegal ones, that come around that, and of course that needs to be taken care of by government officials, which they do. But then even for this formalized miner, where does the gold go? So the World Gold Council actually started an interesting project of working with the central banks and different companies to see if the central banks can be the official buyer of this gold. That made a lot of sense to us. I know that the project is currently working in Ecuador, in Brazil, I believe, and they're looking at Peru as a model. But I think that we have to look at the entire supply chain for a solution for them also, to be able to say, well, sure, we give them the concession to be able to operate inside of ours. We try and work with them in terms of the standards that they are using. And it's actually interesting. They are raising their standards. And then the final part, which is where do they sell their product? So if we can give that to them in terms of the formalization process and the end of sale part, well, then it starts making a lot more sense. But it does require that entire collaboration chain to be able to have any type of success with it.
Yeah, it's that kind of whole system change, isn't it? Emily, have you got any examples where artisanal mining's moved from being informal and not having those legitimate routes through to a more formal sector that's actually benefited everybody?
Yeah, I mean, the context that Global Witness knows best is that of artisanal mining in Africa. And I mean, worldwide, I think Brent's given us a bit of an idea of how complex this is. We're talking about the employment of about 45 million people. So artisanal kind of makes you feel like, oh, this is a small scale thing, but not at all. This is really quite big. And similar sorts of observations that Brent has made. Artisanal mining is taking place in a variety of different contexts, sometimes close to or on mining concessions that are official, sometimes completely disconnected. And really, I just want to echo Brent's comments about collectivism and connectiveness being the two key things. Women in mining chapters in Africa demonstrate the power of people being able to work in collaborative networks, but most of all being able to have access to not just buyers, but actually we're talking sometimes about incredibly large geographic spreads where people are expected to take these resources, kilos and kilos of these resources, first to one place to have it certificated, which is 50 kilometers away, and then to another place in order to be able to sell that on, which is just not feasible for most people on top of their day's work. And so for Africa, that question of bringing infrastructure alongside the formalization or being able to work in cooperative situations is going to be key.
Okay, so again, it really is systemic change rather than just single interventions. You've got to be working in partnership with governments, license holders, everything. Yeah. Okay, so it's quite a challenge then. So if we kind of zoom back into a project level, Ingo, you mentioned that you're going to be raising a significant amount of money and it's not just going to come from one single provider of finance. So what kind of trends are you seeing when it comes to funding projects through multiple different sources?
Yeah. Just to round this off on ENS, I think this is a non-negotiable part of any of the due diligence processes that we are currently in. But the interesting shift over the last couple of years is supply chain resilience, and supply security. Nickel is a good example in this case. We had BHP as a partner. They exited our project after they wrote the whole nickel business in Australia down in reaction to falling prices and extreme increase in market share in Indonesia. I'm not going to debate the environmental and social issues of mining laterite nickel in Indonesia, but what of course has come with this concentration, which is pretty unprecedented in terms of a major commodity. I mean, you've seen it in rare earths, but we are getting slowly in the nickel space also to that Indonesia is probably 80% of primary supply, and that is becoming a major concern in certain countries within the MSP. And the MSP, as the Mineral Security Partnership, is, I think, learning very fast to counter that. They have seen things go wrong in the sense, like nickel is a good example, where I think they don't really have a solution yet in terms of, is it tariffs, is it minimum floors, there's everything being debated. But I think the realization is now very strong, and with the US DFC we have gone through the due diligence process, public consultation, the decision is relatively close, now the government is back. But the key thing is non-negotiable on safety, non-negotiable on social and environment. But then the ultimate point is, where is the supply chain on materials, and how can you avoid that you have monopolies or high concentration, particularly if the supply chain ultimately routes through China?
Yeah. And then I suppose, Patrick, if we're thinking about geopolitics, and critical minerals are in the news so much more now, and we're seeing a lot of different interventions from governments and blocs like the EU, where we're trying to access some of the critical minerals much faster than before. And as Emily alluded to, perhaps sometimes this is through trying to speed up permitting processes and things like that. So are you seeing any challenges where perhaps some of this new state-backed capital might have slightly lower or looser ESG requirements than what you do? And how are you navigating that?
Well, there certainly is an influx of a lot of capital right now into the mining industry. And as you said, a lot of it will flow to projects that wouldn't meet our criteria from an ESG perspective. And that's where I think we're not seeing the competition as much, because if there's a project that gets through our due diligence, we're willing to fund it, we're willing to put lots of capital into it. And we haven't had a single opportunity that we've missed because of our ESG requirements. The mining companies that we look at and that we screen and get to the point that we want to invest tend to want to do the right thing. They recognize adhering to standards makes them more resilient. They're going to survive more than a few years. They're not going to get the mine up and running and get it shut down because a Las Bambas situation or the community is constantly shutting them down. So they're doing the right thing. So we're not seeing it impact us as much as you might think. We do have to be creative, and it is a competitive market. And one of the things I will say is I wish all of the companies doing what we did approached it the same way, because you got to have the ESG lens on things, and you have to have standards and expectations that are at a level that don't give the mining industry a black eye. So I think it's in everyone's interest to focus on ESG, to do this.
December 2025.
And again, I don't think we're playing in the same ballpark all the time with some of those state-run funding companies.
Okay, interesting. And then, so part of the reason then that meeting high ESG standards is so important to you is from that resilience piece. You think that those projects are more likely to be robust, able to weather the storms, weather geopolitical situations?
Absolutely.
Yeah, okay. So, Brent, perhaps another one for you, if that's all right. We're seeing an increasing move by governments of all coming out with their own critical minerals list. And then sometimes when something's labelled critical, there might be a move towards nationalism or some kind of state intervention. And do you have any experience with this happening, or any constructive examples where perhaps you've managed to work with governments on things?
Yeah, and on the issue of critical minerals, I think that we have to be careful what we wish for sometimes. I know that there is a strong movement to take a look at the aspect of critical minerals. Many countries, Canada is doing it right now. I know that we've heard this morning Europe is definitely on, but it's not just the aspect of what critical minerals that are important for what industries, but you're also seeing the aspect of the financing part coming into play, or the one that I like the best is probably, in the interest of national security. So what exactly does that mean sometimes? And that brings us to our example. The issue, we have to be careful that the issue of critical minerals doesn't actually, well, it will disrupt our normal business model that we have right now. So our company basically grows two ways, organically, or it grows by acquisition. When we do acquisition, you go out and you get financing for it. Our investors, our stakeholders, they want us to take a look at what we're buying sometimes. If it's a company, determine what is core, what is non-core, what is not really our business, and then we divest some of the assets, and we hope that we get a very good return for it. We have a case where we did have an asset, and it was a gold mining operation that was getting towards the end of its mine life, but it did have a significant copper deposit tied to it, which was not developed, and we weren't planning on developing it. And then we decided, well, we're going to have an auction, we're going to sell it. And the largest bid came from a Chinese company at the time. So we just went ahead with the sale. And then the Canadian government decided, well, we need to look at this, and we need to know that, in the interest of national security, whether we're going to allow you to sell it to the Chinese company. Well, it's an asset in Peru that, we're not selling any shares from the company. It's a straight sale. So I actually had to go to Ottawa and explain the whole aspect of the concentrate market, how this type of interference in our business model meant that some of our investors were going to be extremely angry. Well, don't sell it to the Chinese company, sell it to another company. Well, that's going to reduce the price that we're going to get by half, most likely, or even more, because they know we can't get that high price now. So it's that type of market that we are working in right now that is going to get disrupted by the critical mineral initiative, and that's why it's so important for us to make sure that as we move down the aspect of the governments trying to secure their supply chains, that they're also looking at what kind of disruption this will have from us. Now, there's also, from our point of view, looking at it in terms of, well, what are governments going to do? And the last Canadian budget came out with the word stockpiling and processing inside of it, right? So we know there's not a very big processing part in Canada. That doesn't exist, but maybe it will come. But it's also interesting to see the government talking about stockpiling certain. So in Canada, silver is not on the critical mineral list. The U.S. just named it. What the U.S. does sometimes, what they negotiate in their agreements is sometimes they ask the other countries to do the same. And we know that can actually cause a problem with nationalization. I mean, when Mexico nationalized lithium, it was because it came onto their critical mineral list, and they just decided that they wanted that for themselves. So it can disrupt in the end, so it's making sure that we're staying very close to the policymakers in terms of making sure that there will be a disruption, but what does this mean, not only to the companies themselves, but our entire supply chain. Exactly.
Yeah, absolutely. And the UK critical minerals strategy came out just over a week ago, and again there's mention of stockpiling, more refining and processing. Exactly. So we shall see. And there seems to be a real change in the narrative as to critical minerals at the moment, moving much more to
and by the way, the Canadian government agreed with me in the end. So.
Yeah. But a lot of the narrative over the last year or two has very much moved towards critical minerals for defence.
Yes.
But I think we shouldn't lose sight of climate change and what needs to be done for having resilient supply chains in the face of in the face of a changing climate. So we've only got a few minutes left, but I wonder, Emily, if you've seen any genuine progress on climate mitigation in the mining industry, and if you could share any examples where it's actually working quite well.
If I may start by saying that stockpiling makes me shudder. It's just the absolute worst use of these very precious minerals, to put them in warehouses rather than in the products that we need to fight climate change. So hate stockpiling, hate seeing it turning up in people's strategies. But yes, I'm really glad that you've got a question about climate, because actually in the minerals space, it's not always something that's discussed. We talk about ESG, right? Environmental, social governance. Where's the C? Where's the climate part? And we know that mining does have a big footprint when it comes to emissions. Again, not something that's often acknowledged. This year I had a big project facing towards COP, trying to put language in the COP agreement about mineral governance, basically trying to take the heat out of the conversation that's been going on around geopolitics and start thinking sensibly about how we will use these resources to save the planet. And I started the year having to explain to people why mining should be on the climate agenda as well, because these things are kind of siloed away. But in the meanwhile, we are seeing progress with mining companies starting to address this. There are, green shoots. I sit on the Paris Peace Forum Advisory Board with Anglo American, and I know that they treated us to a presentation about the electrification of their mining fleet and how much R&D money they've been putting into that. But that is, it shouldn't be up to individual companies to have to do that. There should be national plans, and there are agreements on the table at the UN level about technology transfer, and that's also something that we should be able to see as the best possible technology that's the least polluting, being able to be used in mining contexts, not least because of the pollution, but also workers quite often being exposed to the fumes of diesel-powered things. So yes, there is progress. It shouldn't be left up to individual mining companies, and I would love to see us put the C in ESG and really acknowledge that there's a climate piece to this, that reporting on climate and emissions across all of the scopes is also really important.
Yeah, absolutely. And, we can't combat climate change without all of the minerals that you need to put into clean energy technologies. So it really is fundamental to what we're all doing. I'm very aware of time, but I'd really like to just pick Ingo's brain very quickly on green premiums. We've heard a lot of talk in previous years about whether people would be willing to pay more for something that has been produced to higher standards or to lower carbon intensities. Is this something you're seeing at all today, or do you think that that time has run?
Yeah, so this is very much a electric vehicle and battery issue, especially in nickel. Nickel in the batteries is the most polluting or most CO2 intensive input material. The systems are in place. You can in most Western countries you can trace the nickel. You can actually trace the CO2 intensity. There is now battery passports in place. The unfortunate fact is competition in the car industry is enormously fierce in China and then therefore also globally, especially in EV. And the end customer wouldn't know how to differentiate and is not willing to differentiate. And even the car manufacturers currently are basically looking for a reliable and cheap source rather than a clean source. That's unfortunately a fact. It's probably important that everyone here talks about it and says there should be a differentiation, but as long as the end customer doesn't really ask for it, so it's not currently visible.
Coming full circle to why we need transparent, visible, responsible supply chains. I think we're out of time, and Andrew's walked on stage, so we definitely are. So I'd just like to say a huge thank you to the panel for today's discussion. I'm sure we could carry on talking about this for hours, so thank you very much.